Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So the trading setup that we have discussed yesterday suggests a bit deeper retracement because we see that market was not able to proceed higher and test the confidence. So in fact market has turned down before the previous top has been challenged. So it was in the previous trading range. It means that it's not some kind of the fake of the failure of the breakout. This is intentional turn down by the external driving factor, but still from the technical point of view this is just second leg of retracement. This is not the way of action where the market just failed to break through and then collapsed. This is just continuation of the same retracement, and it takes the shape right now of the ABCD pattern. On the CD leg you can see fast acceleration. That makes us think that probably we could get even deeper retracement somewhere to the 618 support around 110 area. In fact, guys, if you recall what we talked about on this upward action, so recall that initially we were talking about this ABC pattern pattern. Once market has reached the OP here, most likely higher, we said, well, here market could form the deep retracement because it has formed the upward reversal swing. So take a look at the swing up is greater than the previous swing down, and deep retracement after that is absolutely natural. So this is just the breaking of the momentum, and the momentum is breaking usually accompanied by the deep retracement. And initially we thought that it should be somewhere a bit earlier, as soon as market has come to this top, because here we talked about the head and shoulders, and the right arm of this head and shoulders particularly suggests this deep retracement. But due to some reasons and including some external factors as well, so this is, if you remember, Fed statement policy, some turmoil around the Brexit negotiations, euro was able to move slightly higher in excess of this top, but retracement has not been formed yet. This was first leg, and now it seems that this deep retracement that we talked about finally starts to develop. That's why this is not the strategy, this is not something criminal, it's absolutely normal price behavior in the current situation. So if even market will drop to the 618 support, this will not be something outstanding. From that standpoint, we suggest that our downward action really has chances to continue, especially because you can see here we have the acceleration to the downside. The problem will be if market will erase the whole action, because don't forget that this is also the monthly reversal candle. It's very important, and if it will be totally erased, that will be a very negative sign. But currently this market has formed bullish reversal, now stands in the retracement. It's absolutely normal price action. So we see every time this happens when the market forms engulfing patterns, evening star patterns, morning star patterns, I mean the candlesticks. So and that's just a larger scale, the same price behavior. So on the 4-hour time frame chart, you can see that our retracement has done well, so precisely the 30% resistance. Now market is turning down again and stands at the FIB support. But here we have interesting tricky moments. So if you will take a look at the hourly chart, so I keeping here the same levels as yesterday, so I do not shift it lower to the market, just to show you that our retracement is completed, and that was the entry point that we talked about. So if you already have the position, you could move your stop to the break even and see what will happen. What's about the tricky moment? So take a look here. We have some kind of the butterfly. It's not, of course, the perfect pattern because it almost would not have the right wing, so it just actually has the extension right to the 127 extension of this retracement. But here we have a kind of the divergence. So you can see that we have the bullish divergence here. The same you could find on the dollar index. But we should be careful with this divergence. It is not very reliable by some reasons. First of all, if we'll take a look at the euro currency as well, but it's better look on the dollar index. You could see that market stands above the broken 30% resistance level. So this is not at the resistance. So we have the breakout and then forming the divergence. Second, here on the 4-hour time frame chart in particular, you could see that market stands at the eve of the forming bullish grabber right here. So if grabber will be formed, it means that market will continue a bit higher. So other words speaking, this divergence is not very reliable and it has really big chances to fail. That's why in the current circumstances, I wouldn't take the long position based on this divergence, because it's a bit tricky and risky. Only if you decide trying to take the bet just because market stands very close to this bottom with a very small potential loss, and if you could just discount this, well, you could try. But this mostly will be like the gambling, not the good context for trading, not the good trading setup. At the same time, appearing of this divergence carries risk of the possible upward action. At least some retracement here is possible. That's why if you have missed the taking position yesterday, you better to wait another opportunity to do this. Although, as I said, chances on the failure of this divergence is significant, still it stands right now, is still valid. And we do not know what will happen. That's why in the current circumstance, when market stands in the support and forming the divergence, well, better to wait some clarity around this pattern. So in particular, wait for some downside breakout, downward continuation here, starting of this action, and then trying to take the position on minor pullback on the intraday charts. That would be much safer opportunity to take the position currently. Speaking on the long position, well, guys, this choice is up to you. Personally, I do not have any desire to trade this divergence taking the long position, so I will ignore it. That's our current view on the EUR. Currently, we do not see any reasons to suggest that downward action will not continue. Currently, market shows the normal price action in current circumstances, minor retracement, downward continuation. Well, and that makes us think that here we still could get another action to the downside, and this based on this ABCD pattern. Second, speaking on the divergence, for taking the short position, it would be better to wait for clarity. In particular, downward action, erasing of the divergence, and then taking the position on minor pullback. If you take in position here yesterday, well, you just keep it. Don't forget to move your stops to the break-even and manage your stops as you would like to. So that's our view on the EUR today.